Hello and welcome to the CNBC-TV18's Mumbai newsroom. I'm Sonal Bhutra and with me today is Ekta Batra. You're watching MFCorner. Well, today we are going to be talking all about the new fund house that is Bajaj Finserv. They recently launched their AMC. They've launched a few debt schemes as well, planning to adopt a strategy that covers all the seasoned investors. So let's try and understand and give a sense to the viewers as well as to what their strategy is and what they're going ahead with this. So we do have a guest with us today.
Hi Sonal, yes absolutely. We have a packed show in the next 30 odd minutes where we will be answering a lot of the key questions with regards to this fresh move. We have with us Nimesh Chandan, who is the Chief Investment Officer at Bajaj Finserv Asset Management, to talk about their new fund house. Nimesh, hi, welcome to the show. Well, wanted to start by asking you if you could take us through your plans for the fund house. What categories of funds do you aim to cover? What is the timeline that you're looking at?
Thank you, Ekta. So as a full suite asset management company, we want to cover all the important categories of mutual fund investments so that we can help our clients in their journey to reach their financial goals. So we'll be introducing products in fixed income, in equities, in the hybrid side also, and we'll be catering to investors across institutional, HNI, and retail categories. So idea is to have all these products available for our investors. We'll have active as well as passive products also. In terms of active, we want to introduce those products where we believe the strategy has the potential to generate a sustainable good performance for our investors.
Okay, so in that case, Nimesh, let's take it forward because you did say that you do have the last mover advantage. But what is your overall strategy? What will you be doing differently that you think will be able to benefit the investors more? What is the key to your strategy?
So as you know, the group, wherever it has gone, it has provided a differentiated and better offering to its customers. Here, AMC is not, it's no different. We are doing the same thing. In terms of the last mover advantage, as we are coming to the category or the mutual fund category now, we'll be launching or using certain things which have been beneficial for the industry or good for the industry. But there have been areas which have been missed out, or those strategies which have not been introduced by the industry. So we are looking to add those also in our portfolio, which we believe are right for the investors. So in a way, we are taking the good and also filling certain gaps which have remained in the industry. Okay. The differentiator, of course, will be investment strategy because that's the heart of our AMC. Here, we have taken a philosophy of Incube, which actually represents all the sources of alpha. So there are three sources of alpha or outperformance. The first is the information edge, where you are collecting the right information, the superior data points to take better decisions. A quantitative edge, where you process that information better in terms of financial model, analytical model, or quantitative model. And then the most important is the behavioral edge. Here, because the crowd moves between greed and fear, is driven by short-term and narratives, a behavioral edge helps you to reduce your own behavioral mistakes and take advantage of the crowd's mistakes. So we have developed tools, processes, trackers, nudges to give us advantage of these three different edges.
Okay. Nimesh, what about some numbers? If you could share with us what your horizon would be, say, when it comes to assets under management in the next 3 to 5 years. How much do you think you can achieve?
So it's a bit early to give numbers, Ekta. We are just starting off. And maybe in a year or so, we'll be in a better position to talk about AUMs, market shares or so. But clearly, this is a business of scale. Over the next 12 to 18 months, you will see us roll out many products. And we would like to be at a better scale and a good scale in this business. So maybe not giving you exact numbers, but we are looking to explore many different categories. And at some point of time, also look at AIF, PMS, and offshore also.
Okay, so at some point in time, you look at those categories, but the first few funds are debt schemes. What made this category so attractive for you? Why did you start with that?
So the three funds that we have already launched, the liquid, overnight, and money market, they become very important for institutions and treasuries for their allocations. Many of them have floors that need to be parked for a short period of time, and so we wanted to provide that. At the same time, a lot of retail investors and HNIs use these funds to have their STP rollout into equity funds that we come out with later. So it is a hygiene product for them to start with so that they can later move into equities whenever they choose to.
Okay. Well, more of an industry question now, Nimesh. What are your thoughts on the recent debt fund tax changes?
So, well, tax was one of the advantages that fixed income products or debt products provide to investors. I believe that fixed income products or debt products provide good returns with easy liquidity. They provide a good diversification over many papers. Also, the most important is that you avoid the reinvestment risk. So here you are able to get accrual plus the capital gains as interest rates peak.
Okay, all right. So that's your take on the debt industry as such. And people have been saying that it has made things neutral versus tax advantage that debt funds had earlier. So that makes it quite neutral, so to say. But Nimesh, hold that thought. We'll slip into a quick break. And on the other side, we'll continue this discussion on the new fund house and a lot more about their strategy as well.
Welcome back. Well, we still have with us Nimesh Chandan of Bajaj Finserv Asset Management. Nimesh, well, thanks for staying with us and answering a lot of the queries that we have. Well, another question that I had is that, there is big money which has been pouring into the mid as well as the small cap funds. If you see the kind of performance, it's outperformed in terms of the index on a year-to-date basis as well. Will you look to launch these in the near future, or do you think it's probably a little too late?
Well, the mid and the small cap categories, when they start doing better than large cap, historically you see that it's a reflection of the confidence in the bull market, and it reflects the positive sentiment in the market. The Flexi cap portfolio that we are going to launch, we've just launched, that covers actually the mid caps and the small caps. So here we'll be moving across market cap categories in large, mid, and small cap for the portfolio. However, in terms of specific funds for these categories, clearly we will launch these funds because they are important for our investors for a longer term. Again, as I mentioned earlier, we would launch based on certain strategies and the timing, which we believe will be long-term beneficial for our investors. But our Flexi Cap fund will be investing in these categories.
So we'll be speaking to you about Flexi Cap fund that you've launched in detail as well. But just staying on that small caps bit, do you think the money rush that we're seeing is sustainable? It is the valuations, we are talking about the earnings growth as well. Just your perspective, whether we will continue to see the rush in small caps?
Sonal, this is an interesting question. If you look at the history of small cap versus large cap movement, you see a cyclical move. And I don't think we are at the high end of that move yet. So we are still somewhere in the midway. Also, in terms of valuation, we don't believe that the broad market is overvalued. And this is such a large category, the small cap, that it is difficult to generalize also. Yes, there will be certain pockets which have reached fair value, but on a broader terms, there are still pockets where you can pick good companies and create long-term good returns.
Well, just talking about that Flexi Cap fund, your Flexi Cap fund will be launched shortly. And what it does is that it really follows a mega trend strategy. So can you just dwell a little further? Tell us what this mega trend strategy is and what can we expect?
So the Flexi Cap fund that we have launched, it just opened yesterday for the subscriptions. This is based on an idea that what does a true long-term equity investor look for? So the strategy that we were thinking of was buy and hold. And what helps you buy for the longer term and hold these companies for the longer term and gain from that? The buy and hold these days has become buy and watch because the companies go through so many different changes in technologies, in economic changes, you see socio-demographic changes. So we've created a concept of mega trends. Instead of looking at each and every company, it is easier to look at these broad trends and then see which companies are on the right side or the positive side of these changes and which ones are on the negative side of those changes. You create a universe by doing this top-down analysis of broad trends, which will last for next 3 to 5 years, and shortlist companies which have a strong potential for growth. We've identified some 6 sources of that, which is technology, regulatory, economic, nature or environmental, demographic, and social changes. The universe then is looked at on a bottom-up basis or a company-specific basis through our Incube process, through our equity research process, and we come to a portfolio which is truly long-term oriented because it has long-term trends in the favor. It is well diversified because it is multi-theme, multi-sector, and multi-size, that it is truly flexi cap, and the portfolio would have certain growth compounders. So we believe a true long-term active investor would benefit from a fund like our flexi cap fund.
Okay, all right. So, the other one that you're also looking at is Balanced Advantage Fund. What is your take on this category? It did see a lot of excitement when this category was new, but do you think it is something that will continue as well? What's your take on this particular scheme?
It is a very, very important category for investors, and we will be launching a fund in this category too. Here we have taken a slightly different approach from the already used, say, valuation approach, which either uses a price to earning or price to book methodology. In our balance fund, we would come out with a strategy where we combine the fundamentals with behavioral indicators. So you are combining certain fundamental indicators like growth, valuation, asset values, and you combine that with behavioral indicators which tell you about the market sentiment. This, we believe, the combination, which will be like a quantamental fund, which will give better entry and exit points for investors within the equity markets, thereby giving them the best asset allocation as the market moves.
Okay, well, lastly, Nimesh, there is expected to be a revised paper on the new TER norms for mutual funds. What are you expecting, and what would you suggest on the same?
So I believe there was a discussion paper and SEBI has taken feedback, and I'm sure SEBI would come out with guidelines which would be in the best interest of the investors, and we fully support this endeavor.
Okay, all right. Of course, time will tell what the outcome really is. But Nimesh, thank you so much for joining us today and patiently answering all those questions. So that is Bajaj Finserv AMC's strategy. But of course, we'll keep discussing it on the other shows. For now, we'll take your leave on this edition of MF Corner. Stay tuned for Closing Bell to take you through the last hour of trade.